think we may have this teed up because John Gray joined me yesterday at Delivering Alpha, along with Whitney Wolf Herd.
Yeah, I got a contact.
But he had some comments on inflation that I thought were interesting, Jim, and actually point to some of the questions/concerns that you have. Take a listen and focus at the very end of his comments here on the labor markets.
I would say inflation has begun to slow, certainly. We see it in shipping costs for the manufacturing companies. We see it in commodity markets. Labor is probably one area where it's slowed a little, but I'd say labor markets remain really tight.
And there it is.
That's about as perfect as it gets, as I would expect from one of the smartest people.
Love John. That's why I wanted to use it.
And charitable, because
it does go to the point you've been making.
That's it.
Labor markets remain tight. And by the way, this is Blackstone, which has many portfolio companies in varied industries, and so can give you a reasonably good snapshot of sort of some of these markets.
Yeah, I mean, you listen to Jonathan Gray, who's got no axe to grind. He wants to get it right, Carl. And what it says is the Fed cannot stop until we have major job losses. Right now, where are the job losses? They're at Bed Bath & Beyond. Well, they're doing terrible. They're at DocuSign. Well, they're doing terrible. They're at Peloton. Well, they're doing poorly. What are the great companies other than Goldman Sachs that are laying people off? And the answer is no. And I never want to root, and it always sounds harsh, for firings. But when the good companies lay people off, that's when they'll be done.
B of A's got some charts out today. What is your main concern about the economy entering a recession in terms of job security? Say, take the tranche who make less than 50K, about 25% are worried about their job security. I assume you think that number needs to get higher.
Man, I remember in 1980, 81, when Volcker was doing Reagan about to come in. Everyone was worried about, David, everybody was worried about their job. I was worried about my job. I would get up in the morning and say, am I going to get laid off today? You know, and you're thinking about, you're not thinking about, hey, I'm taking a trip. You're thinking about, do I have enough money saved for if I'm laid off so I can get another job? Now, that was an extreme period.
Understood.
But that's how people used to be.
Well, this is a somewhat extreme period, certainly when it comes to what we've been looking at right there, the 10-year and the 2-year, the yields moving around in ways that, frankly, have been almost unprecedented in terms of the weekly/daily moves, Carl. And again, once again, we see the market keyed off of 2-year yield up, market conceivably going to start down. The reverse was in effect yesterday, in part because of those moves by the Bank of England.
Right. We are still not seeing another thing that the Fed wants. We're not seeing no bids for homes and homes going down. Now, we are seeing the end of bidding wars, particularly in New York. But that's not what they want. They don't want the end of bidding. They want, remember, they want your house to be worth what it was before the pandemic.
You mean sell below list is essentially what you need to see happen in big ways.
Look, they want to roll back to before pre-pandemic. And I understand that. Prices really rallied huge since pre-pandemic. I think that these were numbers that backed what Mester said.
Speaking of which, Mester did talk to Steve Leisman in Cleveland earlier this morning. She said M2 as a metric, not reliable, at least not yet, hasn't been for a while. Says she wants to see long-term inflation expectations come back down. And then she talked about whether or not we're restrictive yet. Here's what she said.
We're still not even in restricted territory on the funds rate. So you're right. We've moved the funds rate up 300 basis points this year. But look how high inflation is.
We haven't even mentioned the UK and sort of the backward look at yesterday's move. FT today cites a bunch of people saying we were looking at severe scenarios yesterday prior to that move.
Lehman scenario, bring up Lehman. It looks like they were caught. They had a strategy that was about interest rates. I think it's pension funds. You shouldn't be caught. But the question I have, David, is who's caught here now?
We keep wondering. I make calls every day trying to sort of hear if there's anything out there. I'm sure there will be, especially with moves like this that are almost daily in terms of, But right now, Jim, I don't know of any big blow-ups to tell you about at all. I know people are concerned about it.